कुरु मे देव सर्वकार्येषु सर्वदा.
Hello everybody, I am Sarvesh Sharma and we are talking about stock market tutorials. And today's lecture is going to be role of technicals in the stock market. Role of technicals in the stock market. If you are a long-term investor, you should be rarely use technical indicators. Why? Because the objective of long-term investors, they are totally different as compared to the short-term investors. And technicals are used by most of the short-term investors. As a long-term investor, you should know few indicators, 3 or 4 maximum. Technical indicators are based on statistics. There are a lot of indicators available in the market and they give it an exotic name. But they are based on averages, they are based on standard deviations, they are based on volume shape, bell-shaped curve. These indicators are only manipulation of historical prices. They give you just clue to enter into the market. And they do not contribute 100% to the price behavior. The reason? The stock market is combination of many fields like finance, balance sheets, statistics, mass psychology, sentiments, and these days IT is also playing a very important role. So if 5-6 different fields are interacting, no one can contribute 100% to the price behavior. Now we shall learn 3 indicators. First is moving average, and second is average true range, and the third indicator is a derivative of average true range. It is called super trend, and we shall be covering 4 different stocks. First stock will be Reliance Industries. Why I have taken Reliance? Because I had been recommending these stocks to my friends from last 3-4 weeks. And second, Reliance Industries during crisis found support from their promoters. Mukesh Ambani and his family, they bought a lot of stocks at the average rate of 1070. They supported their stock. Second stock will be Bharti Airtel. Bharti Airtel is a stock which was affected to a very limited extent because online usage increased due to the lockdown. And third stock is going to be SBI, and fourth Tata Power. These 2 stocks got hit because of COVID-19. Some other stocks which were in demand, they were pharmaceuticals and FMCG stocks. We have talked about them in our previous videos. They are rolling around 52 weeks high, and we shall understand how we apply these indicators on these stocks. But before we do that, let's understand about what is moving average, what is average true range, and what is super trend. Moving average is the average price of last n number of days. Let's suppose if you want to go for 10 days, so it is going to be the average price of last 10 days. So that means in order to calculate 10 days moving average, you should have at least last 10 days record. So in this example, we shall take the example of Reliance Industries. The data which is available is from 23rd of March, and from 23rd March 2020 to 7th of April 2020, it has got 10 days record. So this closing price of 10 days, their moving average comes 10061.11 exactly. Now if we want to take the record for the next day, we have to delete one record. We have to delete the record of 23rd of March, and it will get replaced by data of 8th of April. So we will get again 10 days moving average. So this is going to be the next day's moving average. So like that we will get moving average for new day. A new record, edit, old one got deleted. A series of numbers will be generated, and this is your 10 days moving average. Similarly, we can make 200 days moving average, but for that we need 200 records. So now let's see that in this example. Let's see this. Here 1, 23rd, 2, 3, 4, 5, 6, 7, 8, 9, 10. This is your 10 days moving average. This 10 days moving average is 1066.11. It is based on the settled price of the Reliance Industries. Now the next day we are going to delete this rate because last 10 records are going to be from 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So these 10 days moving average is 191.79. So the next day we'll delete this record. We'll start from here, 25th of March. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So average of these 10 days is 1118.67. So in that way, we are getting a series of numbers which will give you moving average for 10 days continuously. It's a moving line. So this moving line is called moving average for 10 days. Similarly, if we take 200 records, we will get a moving average for 200 days. So that's how we calculate moving average. Now 200 days moving average is very important. These things we will see when we'll analyze the graph. When a stock is somewhere near to 200 days moving average, one should buy. That we will see how the Bharti Airtel stocks came near to its 200 moving days average. As a reaction, it fell with the market because during lockdown, data consumption is going to be more. Other stocks were 50% down, like you'll see Tata Power, SBI, they are 50% down. And this stock was not 50% down. It came up to 200 days moving average, and from that point it bounced back. So this is importance of 200 days moving average. Long-term investors use these indicators to buy the stock. If the good stock, it has come to 200 days moving average level, they'll buy it. One criteria I told you about PE ratio, that's another criteria. People buy based on this criteria also. When it comes near to 200 days moving average, I am going to buy this stock. So now let's talk about the next indicator. It's average true range. Similarly, average true range contains the word average. That means we have to calculate the average of certain number of days. And true range is the distance covered by a stock in a day. It's a maximum distance, we'll say. Maximum range covered by a stock. First of all, we'll calculate what's the maximum range it covered. Maximum range has got a criteria. We'll discuss that in the example. And once based on that criteria we have calculated, we have found this is its true range. Then on the basis of that true range, we'll again make its average. It can be for 14 days. For that you need a 14 records, as we have discussed in last indicator. If we are going to talk about 10 days ATR, then we'll calculate average of 10 true range records. And if we are going to take 20, then we will be taking average of 20 true range records. When we'll see the example, this thing will become clear in our next slide. Let us see the data on 25th of March. For the calculation of true range, first of all, we will calculating high minus low of 25th. High minus low is 188.75. But that means true range is not 188.75, it is 202. Why it is 202? We will discuss that part. Now the high price on 25th of March is 1153.65, and last day when it closed it was 951.65. The difference of these two is 202. And see, we'll see part we are considering low rate on 25th, that is 964.9, and a closing of previous day 951.65, that is 13.25. Now the highest value among these three is your true range, and that is 202. And when we take the average of 10 days, it will become 10 days average true range. I hope I am clear on average true range. I am clear on moving averages. Now let's look at the previous chart which we have seen, how we are going to use ATR, what is its utility. Same chart, 25th of March we calculated 202. Similarly we calculated for other days. From here we will calculate 10 days average of these 10 days, then average of these 10 days. We'll delete the last record. Like that we will get a figure 94.60, 93.20, 88.90. You can see that this is 10 days average of true range. Now you can note one thing here. We have smoothened this part, true range. Once we have smoothened this part, the value you can see it is reducing slowly from 94, 89, 72, 72, 74, 72. What does this indicate? This indicates that true range is getting narrow. That means volatility of the stock is coming down. When the volatility of the stock comes down, confidence level of investors get increased. They buy the stocks when volatility is low. Higher volatility is a symbol of nervousness, panic in the market. You can conclude here that volatility is coming down. So that means markets are going to move up relatively. Now we shall apply these studies on different stocks. First one is Reliance Industries. This is the weekly chart of Reliance. Just for sharing, I have put this weekly chart. Otherwise, we'll be discussing daily chart. It is very clear that this stock got support at around 890, 870 levels. The reason, because it was hovering around at this range 3 years ago. And one more thing, most of the buying has took place around 1060 level in this stock. That we'll see from the daily chart. You will get more clarity while we will see the daily chart. And once we shall be discussing super trend also. Now you can see that average true range chart here, it volatility increased and it started coming down. Here it is coming down, ATR. This is your 200 days moving average, which we discussed. And this green and red lines are your super trend. Super trend is extension of average true range, where we take a standard deviation of average true range and standard deviation of degree 2. We plot it against ATR. So that means if ATR line is somewhere here, standard deviation -2 comes to this level and +2 it comes to this level. So there will be a loop like going on. So using that standard deviation of ATR, this indicator has developed, which is called super trend. What basically in layman terms it says, if green line is cut, we should exit from the stock, and when the red line is cut, we should enter into the stock. Now when this line stock price will close above this line, this red line will vanish and the green line will start coming, which is that super trend is now saying to remain long by the stock. That's the only indication. But we have given you so many other ways to get long into a stock. PE ratio and 200 days moving average. So these are different tools which suggest you when to go long or when to get out of the market. It can act as a stop loss also. Let's say somebody who entered into Reliance Industries at this level, 800 or something like that, they can make an exit at this point. And when the things improve, again, they can start entering at that level. You will see examples in other stocks. It rarely gives you loss. But as a long-term investor, once you have entered into a right time at a right price, there is, I think, no need to get into all this. Using so many indicators is going to make you more confused. And people, those who are investing on the basis of fundamental, they are making more returns as compared to the people who are using technical indicators. Now let's take this example again, Bharti. As you can see, the Bharti stock reacted. It touched the level of 200 days moving average and its volatility also started reducing, and it never came down below 200 days moving average. It touched 400 levels and again it bounced back to 500 level. Now see that here, if somebody would have made an exit on the basis of super trend, again he can re-enter into this stock without making any loss. And it's more or less the same price. This is the way how people are using these indicators. Now coming to the next stock, State Bank of India. Now you see that State Bank, it has got 200 days moving average around 291 and stock is around 190. So if you are going to buy this stock at this level, chances are there that this stock will touch 200 days moving average in the times to come. SBI is a good stock and it is way below the 200 days moving average. So that is an indicator one should buy this stock at these levels. Volatility started coming down, stock is getting accumulated, it is getting consolidated. It can take a next move which can go up to 290 level. Now let's watch one more stock, Tata Power. Its graph is also similar to State Bank of India. Stock came down, it got consolidated around 30 to 35. Volatility is coming down. 200 days moving average is around 60 rupees. Right chances are there that this stock will go back to the level of 60s in the times to come. Again, I'll say, if you are buying a stock at half the rate of 200 days moving average and the company is good, there's nothing has gone wrong with the fundamentals, one should buy this stock. It will give you excellent returns in 1 year or 1.5 years. This stock can again go back to the level of 60s or 65s, maybe 70. So it's a good idea to invest at 30s, mid 30s and make an exit around mid 70s or 70s, 60s, 65. So with this, I conclude my lecture. I hope you have got a very clear idea, moving averages, average true range, super trend, and how to invest, how to make use of these indicators, looking long-term point of view. Those who want to subscribe my studies, they can note down my bank details. Stay healthy and have a nice time. Thank you very much.